I founded VTS in January 2012 with the goal of helping all of you crush the market and start making real progress towards your long-term retirement goals. Now, the primary way that I do that is what I call tactical rotation through volatility targeting. Fancy words, but what it means is I'm using my VTS volatility barometer to quantify the current volatility level in the market, and then I'm only holding the asset classes that perform best in that specific environment. The point is, through effective volatility targeting, we can make sure that we are only holding the asset classes that perform best at that time. And the cornerstone of my work here is my VTS volatility barometer. Let me illustrate how it works. So I'm sure you've heard of the VIX index before, right? It's the most widely referenced and well-known volatility metric. But the problem is, it's just a representation of 1-month S&P 500 options. But the market is way more diverse than that, so if you do use the VIX index to guide your trade signals, it's simply not going to work. Traders will want to also consider looking at the VIX futures, and the cash VIX term structure, VIX 9D, 3M, 6M, and maybe the volatility risk premium, implied versus realized volatility. But there's also the Volley index, the VVIX, SDEX, TDEX, skew, average true range, standard deviations, exponential moving averages. So how do we decide which ones to pick? My VTS volatility barometer is a composition of more than a dozen volatility metrics that combine to be the best representation of overall market volatility that you'll find anywhere. That's what's responsible for my market-beating success for 15 years. As you can see, volatility targeting with a very robust indicator that takes all aspects of the volatility complex into consideration, this is how you're going to finally start getting ahead with your investments. You've got to stop spinning your wheels with that buy and hold style investing. There's nothing wrong with holding stocks or short volatility during stable markets, but we know the performance is garbage when volatility elevates, so why keep holding them? You've got to be willing to cycle out of those dangerous positions and into the best asset class to match the current environment. Tactical rotation through volatility targeting. I've been doing this a very long time, and my volatility barometer is your path to better investing results.